What is going on, everybody? It is John Salama, CMT here with Rocco. Not the new all-time high dog day. Not much of those going on today. Not a fun day in the markets. You're getting some pullbacks in some specific areas, really financials. We'll take a look. We always reference, of course, the ceasefire and how the market changed when Trump announced that in early April. And obviously now it is basically off. Let me share the doc in the meantime. And we'll see how much that's changing for markets. I'm keeping an eye on volatility today and really how the market is reacting. But we'll take a look right here. It is 2:10 p.m. And we'll get into the biggest movers right here live as the market reacts to more strikes in Iran. So what's going on is banks and materials are really the ones getting hit. You're not seeing, legit, tech obviously getting, very hard today. Semis have had an awful week already, and we'll do that in the weekly recap. But really today, that's getting hit, and we'll take a look at all the relevant charts. It's banks and materials down about 2%, and boy, they are still piling into China. Some of the China names like Bob up 11%, JD I believe was up 6%. You're seeing a lot of strength in China and KWEB today, and of course, oil up 3% on the Iran strike. So we'll take a look at the USO chart and see where things are on that. All right, let's do the screen share for the portal here. It is still summer volume, even with the reaction to the war. Let me see here. Screen share. Okay. Yes, so right here live, we are looking at 26 million. Wow, shares of SPY. That is amazingly low for 2 o'clock. The average for the whole day is 60 mil for the past month is what we've been doing. NVIDIA up today, nearly 3%. They're hiding there. Tesla down 2%, had a huge day the other day. Intel down 2%, Broadcom up 5%. You see all the semis are dancing and zigging, and where the others are zagging. Apple up 1%, SpaceX down 2%. That is sounds silly saying an all-time low, but that is the low now below the IPO price last month. Microsoft down 1% again. This thing's under under 390 here. Marvell up 1%, and the semis overall are up 2%. Amazon down 2%. Meta down 2%, and did we cover Google yet? Google, Alphabet down 2%. Palantir down 3%. So mostly red on the screen here. Let's get in the intraday tape. So around, let's just do the day here. So this was 4 a.m. I'm looking at SPY here, a big drop. 5 a.m. is when we actually technically bottomed, if you count intraday pre-market activity. We hit 739 there and came very close. Here's 9:30 opening bell. You want to see if they're going to take it all the way up. And a bit of an oopsie here at 9:30. They took it all the way to 745 just to take it to 743. And we actually troughed at 11:30 at 739.5. Portfolio moves. I do have an order right here to exit Jets. The thesis has obviously changed with oil spiking, and the stop is the stop. So that's the level I had predetermined. I think I even documented it on Substack and on here a couple of weeks ago or 2 weeks ago upon entry. So it's still a profitable position, but ugly day for it. Getting back to this, so we're dealing with a heavy resistance here. This is on a short-term intraday fractal basis. This is the 200 bar average at 745.71. You can see here we've been trying to tango with it for the past hour and change here with lower kind of lows here, but a rising view up. So I'm curious where it's pretty much under 746 and above 743. I want to see how the volatility fills out. I think we probably end up right around 744 to 745. We'll see. Above that, I'll take away further strength from the markets. Below that, I'll see a little bit more weakness. We'll see what it means. Okay, here's the 1-year chart. So let's get away from just the intraday noise. So we've been saying I had felt like just with this pattern here, the S&P was going to try and rest at inside of 760, but south of it there. I felt like we met our objective. And the interesting thing is the Qs have been doing their own thing. So is the IWM, and the Dow's been hitting all-time highs. The indices underneath have been doing all their every which way, moving as they do. Important figures to have here. So the 21-day exponential on the SPY is 742. Whoops. 742.60. You're holding it by $3. A decent looking candle here. When you see this in the market, look at this little handle. I'm trying to hover over so you guys can see that candle. That's a nice lower shadow. That means 739 was for suckers if you sold that, and they easily got it above that by $6 or nearly 1%. Let's see where we close. VWAP, the important number is 744 even. Above that, I'll see this as a decent day. We'll look at, oil and what the ramifications are. So I do think for right here, right now, unless crazy things happen overnight as usual, but I'm not counting on that. I do think 752 was the near-term objective reached right around America's birthday, like about 2 days ago. I do see us digesting these gains with a floor of, if things get really volatile, honestly, around the 740 mark is where I would pin it here in terms of probably a little bit lower. Just looking at the Gamma wall, and I published this on Substack the other day. We could go a little bit lower. OPEX is next Friday. It's interesting to see these tall shadows here in this price discovery that was starting here in early May. What is the truth and where do we fall into? But I do think potentially if things get really volatile over the next 2 weeks, 735, I do think, as I said, the ceiling has been met at that 765 mark, 760 rather, which was the all-time high from now 5 weeks ago. All right, so basically still, as I'm saying, consolidating for the next 2-ish weeks. This was a very strong rally off the lows of June 26th from 717, and it went all the way to 752. Not an actual true price. I probably have this true price VWAP on the June 26th at 727, and that rally culminated right here at 752. A great rally, and then we're going to go. What I'm looking at here is the structure of this W pattern. Are we going to be range bound for a while, and now that's where the growth is going to rest for a bit, or does the bottom give way? So the 200-day moving average going higher. We are at a 53 RSI above the neutrality point. So a lot of things. Let's get under the hood, and then you'll see what I mean in terms of what's pushing and pulling today. And this is truly where a lot of the action is. Biggest standard deviation movers, number one, and it's always been an interesting chart now in the past, several months, but especially here coming off that 52-week low of 2 weeks ago. And we said not immediately trade this, but look for it for signals, see if this is, reasonable or not. I had said then, I'm looking at my notes here, June 29th, expected dead cat bounce to 21-day exponential moving average around 34. We are at 33.5. We're up 3% today, a monstrous rally off the lows of $31. It's pretty strong, $2 for China. Half of that gain coming today. I do expect this to continue for about another week or so as folks try and maybe exit a little bit of a domestic beta here as the U.S. is, upping the ante a little bit more into the Iran strikes, and maybe folks say, you know what, let's rotate into other areas. China, very interesting point. We are at 49.8 RSI. Every time we've gone to nearly 50 since mid-May, it's absolutely rolled over. So I want to see what it does here. Is it magnetized towards 34.5? Does it have that kind of strength to get to its 50-day moving average? Kind of a character change from a loser to maybe you come off the bench and more of a winner here, and then you'll start to see these moving averages start to stabilize. The shorter term one here in the 9 and the 14 are already starting to go higher. So as I said, I do expect this to go higher for about another. Today's Wednesday. I say something like early to middle of next week. I do think it wants to pin about this 30. So difficult because look at all this levels here as well before. View up on the day is 33.53. This importantly also has to close above its view up if I want to have belief that it does trend towards 34.5. Nothing even in terms of a breakout system. It's at 13. It's a 3-week high. So again, nothing really I would trade, but there is some rotation. If you really want to believe in this, and I would be a trader to this, honestly, because the 200-day moving average is still rolling lower. If this starts to close above 37.80, you can really start to get, if it has mojo still, you can start looking at October calls and believing this this resurgence in China. But for right now, they're gobbling it up today, up 3%. Let's look at the next biggest mover. It is the KWEB. So obviously Chinese internet, so folks strictly focused on tech here, up nearly 4%. BABA's having a huge day. Is BABA. Not going to spend a ton of time on this. What I say for FXI typically goes for KWEB, but this has had, so off the lows here, 23, this had a stronger rally in the past, nearly 2 weeks. And look at this. This is what I'm saying. It's getting to its objective, it seems, 26.52. It got there today, nearly high of day, and now it's going lower. So I don't think, and I would try and have either a pairs trade, buy FXI, sell KWEB, or use one as a confirming indicator. So meaning this is going to corroborate with that 34 half level of FXI is going to be very close to 2760 in KWEB. I think this has less wiggle room, though. I think this has, if I said FXI for the middle of next week, I think this has through the end of this week. The 21-day exponential is 25 half for this. I expect it to tread water around that point. So I don't want to sell upside calls on this just due to FXI could potentially rallying and breaking out to new 1 month highs. And also this is at 56 RSI, its highest level since May 13th, the same level we just looked at for FXI when it started rolling over, also similar to KWEB. This thing hasn't been above 60 RSI since it was above the 200-day moving average, and the 200 was going up. So and that was in early days of 2026. So interesting trades. I wouldn't chase this personally here. If you were to get a where is June 8th here? If you were to get a close, I mean, the earliest dancer to this, in my opinion, would be a close above the 1 month high, and that is 26, about 26 half. So closes above that. It looks like it could do it today. Technically, it would be a breakout, and then you can take a chance to the next heavy resistance area, which would be at 29. All right. And the next, of course, where all the action is today, oil. Okay, let's look at this. This is an interesting intraday. Buyers almost always come in and step in to buy oil. Look at this, though, reverse, this kind of hammer here. So we hit 115. VWAP is 112. We're at 111.70, and the low was 109. Kind of emblematic of the market today. It sank a little bit too low, and then they bought it up. Rising 200-day moving average. However, this is going up by about 18 cents a day now, is the 200-day. We've been under 50 RSI. I mean, the beginning of June, it was above. We got actually to 54 RSI. But this one has been a little bit of curve fitting, I suppose. But this one has been under 55 RSI since the couple days before Memorial Day. So we're going on 6 weeks here. And it's interesting. We got on the absolute top today at 115, the top peak fear in oil prices today. We actually tangled at that level to the 20-day moving average, and they kind of got shot down. It went lower from there. So I'm just curious, the appetite and what happens next in oil in the coming days, weeks, especially everything that's going on with the ceasefire. Of course, what happens at Friday at 4 o'clock? Do we increase strikes? I think oil continues here. So we are at 111.5 here. Interesting looking candle. As long as we close above at 111, if you want to be specific, 111.90. I do think this is going to have a higher push into the coming days. This looks like it's going to be a magnet towards its 21-day, which forgive me if I misspoke. It's 114 half. So that's another $3. That's another 2-3%. I know folks can play this on Kalshi and things like that in Poly Market. Where do you think oil's going to close? I do think it's higher than here. There is significant resistance, though, at this 123. If this starts to go to 123 above it in the coming week or two, look out because that's going to be a different acceptance and digestion of the market. So those are my levels here. I do think it's going higher easily. I want to say till 115. Then I think it hits that brick wall at about 122. All right, what are they selling? And they saying, no, get me out now. It's pretty much two-way action. Or two assets that are discriminately just getting sold off, and it's financials and all the short-term bonds or the TIPS, ETFs, fixed income, a lot of them, not CLT, that's longer on the part of the curve. The shorter ETFs, inflation, they're all hitting 52-week lows today, meaning price lower, yield higher. Here is financial. I'm sorry, not financials. KBWB, these are the banks. We'll look at XLF next. This is having a huge fall, down 2.5%. Ugly looking candle. This thing has been absolutely on fire since mid-May, especially once you got this breakout above $88. It was just a race to about 97. A lot of the banks globally have made all-time highs. You're looking at RBC, BMO, a lot of folks saying they don't have enough financials exposure. Today, coming off easily from all-time highs to a 21-day exponential moving average in just 1 day. That's a 2.5% move. So I like buying this on pullbacks about 93 even. So if you were there this morning at 93 even, 93.30, congrats. I think that's absolutely great. The VWAP today is 94.39. They're selling it, so it lets me know there's potentially a little bit more selling into tomorrow. Let's see what happens during the power hour from 3 to 4 o'clock. But it sounds insane. I'm looking at the chart. I like this one for the next week and a half. It's got a lot of, again, when I look at assets, above 50 RSI. Yes, it's crashing here to levels, the lowest it's been in a month, but still an upward trajectory. Every single moving average going higher, obviously with a run like that from 84 to 96. I still think it's going to go higher, probably not in a straight line, with a 96 target in the next 10 days or so. You can get those October calls cheaper today, obviously, because this group is on sale. I don't think it's the worst thing. You obviously do need the war to not last months and months and months. Don't make this a hope trade, but strictly speaking, on the technical chart, pullbacks to $93, I believe, should be bought. It is a strong chart. Have your stops in place, and the target, as I said, is $96. Broader basket of this is the XLF, very similar. You could barely tell almost. So a little bit different, though. The 200 moving average is just barely going up 1 penny a day. XLF is what a lot of folks follow. It's got the JP, the Goldman, the Morgan. Here on yesterday, look at this all-time high here. Okay, that is the all-time high. All right, that's for you home gamers. 56.59, and then look at this. VWAP was 56.22, and then it closed at 56.05. So that to me is getting a little bit too big for your britches. It shows me typically when you see that, the market's going to pull back. It's going to take at least a couple of days, a week, 2 weeks to get, maybe a month, even more, to get back to that point. It wasn't ready for that prime time, kind of like USA Soccer, and very unfortunately, Egypt yesterday against that guy. They call him Messi. So this is XLF down 1.6% today. Still see this having a decent trajectory. I like pullbacks to $54, even if you're able to get it. Today, it was not that low. It was only $54.95. So look at this in the coming days. VWAP is 55.30. It's very close to that today. If it closes above it, that'll signal to me a little bit of internal strength. If it gets can garner 20 cents higher from here. And other than that, I do think it'll have a decent ish week. I want to see where the bulls step in for this one. And again, this is just coming off of a 63 RSI is the XLF. And then the last one. So these are the things that are getting hammered today. They're buying China Internet, and oil, okay? And they're selling banks, financials, and materials. These things just got more expensive, obviously, with more expensive oil here, as does everything. This group, materials, and we were just highlighting this a couple of days ago, peaked right around Valentine's Day here at 54 buckaroonies. Strong looking chart, rising 200 moving average, hasn't closed beneath it since early December. Okay, materials, a tough one here. Not the super most volatile group. I do expect this one to straddle around. I think I suggested selling strangles on this last week. I still like that idea. They just don't pay handsomely, unfortunately. So I would still sell the 53 half, 49 if you can get it. Overall, I do think this is going to have being straddled to about 51 half. So I like buying back on days like today. I also like seeing the higher lows here and do expect that to hold. And then ultimately, definitely not going to be a straight line over the next 2 weeks. I do see this one potentially heading to $53. So kind of tempted to look at October call spreads and materials. They just don't really pay. And then options, you really got to make sure, since you're paying for every single bit of theta there, you want to make sure the juice is worth the squeeze and optimizing the structure. Otherwise, I don't hate the idea of, again, it's not going to pay a ton, but you can sell the 49 puts going out in July, buy something against it, buy the 48s against it so you can sleep at night, or you can sell those upside 54 calls and buy something, buy the 55s against those. All right, so those are the big losers today. If you're in banks, financials, materials, you're not so good. Let's look at, I know today was a big changing of the guard with the ceasefire being apparently over, but let's still, as we always do, look at the top 3 gainers of the past 5 days. Number 1, unbelievable. I'll give you flowers where flowers are due. Ethereum, you are number 1 in the ETF world. Up, can't believe my eyes. I might need Rocco to read this number. Up 10% in the past 5 days, or 2% a day. Today, it's quite a bit of a reversal, down 3%. We had called for a dead cat bounce in the group towards its 21-day exponential moving average. And to be frank with you, that is pretty much, so the 21-day, I'll give you the exact figure, is 1306, 3 cents from where we are. It basically overachieved, getting to 1365 the past 2 days. And now it looks like this. So I'm telling you, look at the internals, like testing a temperature, a fever. You get above the 50 RSI you can barely jump above it. Talk about a meerkat. and that's it. That's the most above 50 RSI pricing power you've had since mid-May. Not a good look. Overall, though, this one just to me has a tight ceiling. I do think it has a good couple of days still, but do understand I don't think it's going to take out that 1360. So 50 cents, absolute tops, 3.5% or so upside from here is what I'm calling for. It's such a loser. You would get paid for selling puts. If you're going to do it, it's a spicy trade, and you have to check the liquidity on that. I would sell maybe it's really. I have to check the liquidity to see if this makes absolutely any sense because it might suck up margin in your account. But I don't hate the idea of selling the July 12 puts and then buying the 11s against it. I think this one's still going to be an area of the market that folks. I've just seen this look worse. And if it takes out under 40 RSI, then look out below Mortimer. But for right here, best ETF, just a very strong rally here off the 52-week lows from 11.5 to 1360, $2 rally, 10% in the past 5 days. Always looking for that reversal, and today it looks like we're getting it. I do think it still continues to go higher. Let's see how it trades. There's absolutely risk on, and how folks are playing it into the early days of the end of the ceasefire. Number two, best, again, they're going into the losers, okay? This is rotation. You don't want to go into the stuff that's gotten so high. You don't want to just bid semis to the sky. And we'll look at the losers, and semis are, unfortunately, for a lot of the beta players and momentum players on that list. But number two, best ETF of the week, we just highlighted earlier, it's the second best ETF of the day, is Chinese Internet, up 8%, or nearly 1% and change a day. Again, you're looking at this for this resistance point. They're rotating into the losers that, money goes to where it deserves itself, where it's treated best. We'll see. For me, these are dead cat bounces. And then let's look at this. Another one that they're rotating into, up 5.5% in the past 5 days, although much of it is from today, USO. So in the past week, and honestly, this has been just not today. You can see where this bottomed on the 2nd before America's birthday here at 103 it troughed. And this is just a very I want to say ominous candle, but if you close above VWAP, it's all good. So if it gets above 112, this is a very strong looking chart. I'm telling you, this is going to be magnetized going higher, like I said, towards 120. So that's USO up 5%, and it's going to also coincide with the 50 RSI, and then it'll catch steam from there. That'll have the moving averages go higher as well, and this 200-day will stop going so flat and start to pick up steam. So they've been buying Ethereum, Chinese Internet, and oil in the past week, okay? I don't know how many people are holding or overweight those areas. Ethereum, Chinese Internet, and oil. And let's look at the 3 worst areas before we get out of here. The worst are the SOXX. The worst area, it's been the worst area to be in the past 5 days, is the semiconductors. I am not in. I've been not in. And it really made me hurt because I was missing some of the move after here. And then obviously you get nearly 1 month lows here. So let's take a look at SOXX. To me, this looks like, look at this reversal here. So we're up 1.7% today, a horrendous week. Down 12% is the figure. So down more than 2% a day. Today, up just about that. Look at these candles here. This is a doji here yesterday on July 7th. Huge price discovery point yesterday at $549. The market said, what do you want to do? You want to buy it or sell it? The market closed at $552. I'm keeping things simple for the narrative, and that's how it works. It proves the same point. Today, up 2%. In a tape where we're scared about a war being dragged out for longer, and folks are going into what can grow or what has been proven. Look at the chart. Not as crazy oversold or overbought, obviously, as it was in early June, on its way to its all-time highs on June 22nd of a ridiculous 656. And we said, hey, this has to digest. So let's look at the chart here. This does appear in many ways to be an oversold buy, but you do want to be cautious. The SOXX have essentially put in a 1 month low here, candle to candle on the lows, and you're sub 50 RSI. And look at the internals here, how it wavers, not being able to get as much buying pressure towards the close and throughout the day. So I do expect this to traverse and move towards 590. This is going to be a little bit complicated. I do think this is going to move towards 585 to 590 over the next 2 to 3 weeks. Probably closer to 3-ish weeks, and it's going to be a frustrating move due to just seeing some of the money flow. It seems that changing, and you're going to have some of those shorter-term moving averages go south, and then you're going to have momentum, short-term momentum plays leave this. So it's going to be just a group that's falls out of favor for a little bit. But I'm not expecting that to happen. I'm keeping a close eye on it. The view up today is 552.5. Understand that. The stock is trading 561. So they're loving it today. Like I said, I do think this gets to 585 to 590. So it's cheaper today than it was, last week. I don't know. October calls stand out to me. Something like, it's not going to be cheap. This is a $600 stock basically, but buying October upsides, finance it how you wish, selling another strike against it. If you want to do something much shorter, just be careful with selling. I think you're okay if you sell the 515 puts, but check your risk and everything like that in your portfolio if the juice is worth the squeeze. So SOXX, the worst ETF in the whole world in the past 5 days, obviously top 3 in the whole world over the past year. A little bit of bleeding. Let's see. I think that may have been it when they tested this 532 floor, same as they did on June 9th. They got to 522. I think this could be it, keeping an eye on it before we head towards 590, which is, 30 buckaroonies away. All right, that's the worst ETF in the world, or ETF in the world in the past 5 days. Number 2, and of course correlated because it's the AI memory group, Anyang. June highs was 221, and boom, this is basically what we're seeing here. You want to see the buyer stick in. That's an amazing looking candle today. This sank to 168, high of 182. View up was 177, and it's trading 180. That's what you like to see. What I don't love to see is this was like a sloppy W, kind of like the S&P pattern. Typically what will happen here is it'll bounce, and you'll want to sell strangles. It just stands out like selling the 225, 170. There's a little bit skewed, a little bit too much downside. But once it breaks, if you have any kind of a 6-week low, get out, because that momentum is maybe a little bit too much to carry it further. That's why I'm also seeing 44 RSI for South Korea. Are the buyers going to stick in here? Because this is basically the low of relative strength all year. So they don't keep a champion down for too long. Like I said, my low for this was 165. It got to 168 today. Similar to what I just said, EWI, the second worst ETF, okay, down 10% in the past week, 2% a day. Today, down 60 bips. May not be done yet. But to me, like I just said, SOXX is going to be magnetized towards 590 over the next 3-ish weeks. It appears to me that this would also be moving towards 193 over the next 3 or so weeks. Be careful, because when the money flow leaves, they really start to exit. Overall, it's kicking SPY's butt, relative strength for the past year, and the thing's just been, kicking, every which way. Want to see this gather steam, though, and get to the 50 RSI to let me have some faith in it. But I do think this is headed towards 193 trades. The thing is so crazy. You can just buy the stock if you believe that thesis. Otherwise, you can also look at October, 195 calls. They're cheaper today, but don't, understand this is crazy volatility. So this is always going to be priced to perfection. And the third worst group, and we've been highlighting this a bunch here as bonds go lower, rates go higher. The third worst group is home builders, believe it or not, of the past week. So semiconductors and South Korea, very correlated. They said, let me sell these 2 winners. Look at this rotation of the market. And the third thing, obviously rates related, is the home builders, which is to me, this is a loser, basically flat 200-day moving average to going lower. It broke lower. And think about the best movers of the past week. This is what rotation's about. They went to Ethereum, a loser, but they're rotating into it to the upside this week. KWEB, a loser, they're rotating into this week. And oil, they rotated into it, and it's been a winner. On the losing side, Semi's a winner. They got out of it for now. South Korea, they got out of it for now. And home builders, our last chart of the day, they are getting out of it for now. So doubling down on 2 of the same instances, oil, home builders, and then the other 4, if that makes sense to you symmetrically, how the market, goes into different ripples of investing allocation. So home builders peaked on February 12th at 123. And then, oh my goodness, right after the war, just basically nothing, a whole lot of nothing. Channeling right around 108. It's already moving average, bottoming on May 19th, just a couple of days before Memorial Day weekend at 93.5. And this is what I'm talking about. Ugly oopsie. And when you see this, it immediately tells me it was not ready. So they tried to take home builders on June 25th, just 2-ish weeks ago, to 118. That's going to take time due to the reversal. And you want to see at least that floor hold. What happens is It got to 118. No oopsie. You want to see the previous level of price discovery hold. That was 115, and then the bowling ball goes off the table. And here is a force to be reckoned with. It's 200 moving average at 107, but look what it's done. It's sliced right through it like a knife through butter, and it's 106 here today. VWAP on the day is 106.5. I'm keeping an eye on this. It looks super weak. We're talking about it because it's down 8% in the past week, akin almost very similar to South Korea. I do not like this one. I think it continues. Down 3% tells me the trend is not over and it's below VWAP on the day. So, the one to me looks more obvious. To me, the 21-day exponential seems extremely heavy now, and that figure is 110 even. This one to me will continue to be in the penalty box, potentially going as low as 102. Do you have any kind of a breakdown? It's inside of 3.5 weeks, sub 45 RSI. You could buy those October puts on it. I'd probably do like something like the 102s and then buy something against it. Also, I don't know if you're going to get paid much for this. You can sell those 110 July calls, kind of like that trade as well. And if you make more than 70% to 80% of your premium in your account, just close out the trade. No reason to have a tweet or something happen. Then you have to kiss it all away on the day of expiration. So that's how you do that. But I don't think this 110 level is going to be revisited for at least a couple of weeks. And OPEX is next Friday, so that'll take you out. All right, top 3 trades of the past 5 days in all absolute terms. If you've been short semiconductors, short South Korea, and long Ethereum, congratulations, you are absolutely crushing this market. Those are the trades of the past 5 days. Short semi, short Ethereum, short South Korea. I think those reverse sooner than later. And long Ethereum, I'm saying the same thing. Actually, Ethereum, I think will have a little bit more leeway, as I said earlier. Okay, we'll be back on Friday for a true weekly wrap-up and a year-over-year look back. And don't forget, Connolly's a week from tonight, 5:30 p.m. We're going to be going over the month-over-month charts if you're in the area. Tell a friend. Boo!